February 9, 2026. This is the S&P 500 E-Futures Mini on the 2002 chart using NinjaTrader 8. That's what the chart looked like today. It was a really slow day. It was a sell-off in the pre-market. Looked like it was 2 legs down, bounce. Then it looked like it moved up one leg, pullback, and then another bigger leg, then choppy. So it looked like it was a sell-off, kind of a bigger scale sideways, then a rally, and then another sideways. It was there wasn't very much price action. It was a really slow day, yet I took 3 trades. The first one being a loser, which is right here. Then the next 2 are winners. Now, in hindsight, this really should have been probably a no trade day. So after the first loss, I do feel the other 2 trades were inferior. They're risky and probably shouldn't have been taken at all. I'm going to get into the setups right now. There's no economic data to really move the markets. It was kind of a day that you should just, I don't know, taken off and not even try to trade this. Because really there wasn't that much setting up for us. In the pre-market, spikes up, sells off, looks like it's a downward spike in a channel, then a big aggressive push down, bounce, 2 legs up, another sell off. Then on the open, so technically you have a localized high, you have a visual first entry, pullback, second entry, got a kind of a higher low right here. We also have a count from here. It's a first entry, pullback, second entry short failure, but it's not a good setup because you're buying second entry short failure off of this candle. You're buying right into this potential resistance area, so I didn't think it was a possible trade there. Pushes up, creates a localized high. It's a first entry long, pullback. Technically, you have a second entry long. Then here you have a third entry. There's a triple test here. I thought about this at the time, and I thought there might have been a trade, but I don't like that this signal bar is red. And I didn't have full trust in this lower support line of this orange up channel yet, because this is what you see in real time. You could argue you're in a range, so you could be switching over to range rules, but the signal bar just kind of made it so that I wasn't too enthusiastic about it. Perhaps the EMA were at least below. It didn't have a violation all the way through. I may have considered it, but mainly since it was a red candle, I didn't really like it. So here I'm looking for a higher low. You get one here, but it feels like it could be a failed breakout of this range, because remember, in real time, you're seeing this. I don't know if prices are going to come back down. I'm not totally bought in on this orange up channel yet. So it pushes up. You have a localized high. It's a first entry long pullback. You have a second entry long here, but you run into the same issue as this one. You're potentially buying into this high of this range. So this candle, although it does create a second entry long, it feels like it's too risky. And it looks like if you did buy it, depending on how many points you're going after, you likely would have gotten stopped out here. The fail breakout, push ups to the high side. Break of this orange up channel is technically tested the high. Now it's reversing. Break of this green down channel is tested the low. Creates a localized low. First entry short, pullback, second entry short. And you technically have a third entry short, but I also saw this as it was forming localized high. First attempt up, pullback. Second attempt. This is a second entry long triple test. EMA is flat, so I'm not too concerned that EMA is going to act as a resistance or a support, but you do have a triple test here. Decent signal bar. Looks like it's 2 legs up. Depending on how you drew it, I had this at one time, but I didn't really like it. Didn't look super safe at the time because it looks like a big channel when it looks like it's more like 2 legs up. One attempt, second attempt. You could reverse back down, but I actually thought this is a possible trade. This is a decent signal bar, enough for a 1-point scalp, and you have at least 2 points here. So it would have worked. Then it gets, if I didn't take this, which I didn't, I wasn't going to try to trade anything here because these candles are just pretty much side by side now. It looks like piano keys. The other thing with this trade is this candle is huge, but then this one, this one, this one, this one are all inside to this one. This is the first break of the support with a strong reversal. So that kind of gave me a hunch that there was probably enough momentum to push back through. If this tail had still been inside this big green one, then I would think there's no trade there because it didn't have enough sellers being caught and trapped, pushing through and reversing back up. So that's why I thought it was a possible trade. And it pushes up, starts moving up on this orange up channel. Break, first entry long pullback. You technically have a second entry long here, but it's an inside bar to this. I'm not a big fan of that. So I'm looking for a higher low. You don't really get a higher low. So prices continue moving up. At this point, when this price action forms this, I established this yellow up channel. I wasn't too sure where the yellow up channel high side was because I did have it down here and treated this as a failed breakout. But when this failed breakout didn't really correspond to a failed breakout on this side and had this strong pushback up, I decided to widen the channel slightly more to eliminate the failed breakout there. So it looks like it's still within the range, not range, but in the up channel. Oh, didn't mean to do that. So it pushes up, looks like it's moving up the screen, up channel. So it hits here. I'm watching, I'm watching very carefully, localized low, looking for a second entry short. You don't really get a second entry short. You could argue there's a small second entry short here, but this is very tiny. Bid break, it is trying to test the high. You have a second entry short here, but now keep in mind you're going counter trend to the strong pushback up. You do have a potential overnight and localized high of day right here. So this could act as a resistance, but this will only be the second time it's tested it. So I'm being extra cautious about trying to take any shorts. Then you have 2 bars after that being inside to this. So that's throwing up extra caution flags. A third one. So now you have 3 bars inside to this guy. So definitely not looking for a trade now because not long or short because I don't have a good feeling about whether it's going to continue up or start reversing. Look at this. You have 4 bars, so definitely not trying to take anything. You do have a second entry long here. It's a bad signal bar floating out in the middle of nowhere. It's also just inside to this big one. Clearly, it's in a trading range now. So I'm watching this. Breaks out. I'm thinking there's a failed breakout here, but it keeps going. It keeps going and kind of, for the most part, touches the high side of this yellow up channel. So I'm trusting this yellow up channel pretty well now. Now I'm only looking for reasons to go long because the reason to go short, you'd be counter trend to this really strong push up. But in order to go long, you need it to be reacting to the EMA or setting up near the EMA or setting up near the low of this yellow up channel. So again, it looks like it's just range bound. You do have second entries in here, but they're not very clean. They're just risky. Pushes up. EMA and the lower side of this yellow up channel support are slowly like converging to each other. So if a setup bounces off this and it bounces off the EMA, that's going to be a very strong setup or very strong key entry point. Excuse me, not necessarily a strong setup, but it could result in a strong setup. So prices continue moving up. There's no trades here, just very tight trading, just congested. Bounces here. This is the first break, so I'm thinking it's moving down this green down channel. I'm expecting a test of this yellow up channel. Break of this green down channel, comes back, tests the low. As it keeps going, I kind of abandoned this green down channel and widened it to this orange down channel. So this green down channel doesn't look like it's in play anymore. The first breakout here, looking for a corresponding breakout in the high side. You kind of get a corresponding breakout here. And I actually saw this. I saw this a first entry short pullback, second entry short. I thought this is actually a pretty decent trade because I thought I liked that it engulfed this one guy. Looked like it just engulfed 1, 2, 3, almost this fourth candle. It's a really strong push down. Seeing this, I thought there's definitely a trade here. I want to reduce my risk. I'm going to enter this trade 1 tick below this guy. Hope it picks up, then flushes down. It's also pushing and resisting against the EMA. So the EMA looks like it's holding prices down. And this yellow down channel has a failed breakout here corresponding here. So I'm expecting prices to move down. Also, if it's in a range, there's enough room to squeeze down to the low. But this happened. That's why I noted it as a quick drop. I'm going to go a few candles over. If you look at the time step of this guy, this is 10:21 and 12 seconds, 10:21 and 14 seconds, 10:21 and 16 seconds. So in a matter of 4 seconds, about 4 to 5 seconds, it dropped like this really quickly. I dropped my order. It was sitting up here, never would have gotten filled. Even if you put in 1 tick below this guy and you waited for this guy to close, it's hard to have caught this move down. It just flushed down really quickly. So after this one pushed down like that, yeah, I'm definitely not trading this. Even if it came back and gave me a lower high, second attempt, it feels like the move has already been done. Now, I didn't really know if this was reaction to any kind of news because there's no real market moving news scheduled for today. So this is just kind of came out of nowhere. Pushes down, creates a localized low, first entry short pullback, potential second entry short, but it's a bad signal bar. At this point, I thought, could it be that the bottom of my channel is here and have a failed breakout here? Or could it actually be slightly lower? So I had this, and I had a superimposed another line here and a superimposed another line down here. So when I was thinking this could potentially be the channel coming down. The other two may not actually be that useful. Of course, I need more price action to verify this. I saw this as localized low, first entry short pullback, second entry short. I thought it was almost trade. I just wanted this to be a better signal bar. Pushes down, and this is actually where it sets up, and I take my first trade. So it's first entry short, second entry short, pushes up. Keep in mind, I'm thinking this is my channel now. If I had it as I had earlier, there's a failed breakout on this side. I have to be extra cautious because there's no failed breakout on this side. However, since I was playing off the idea that this is the actual channel, I thought clearly I'm at the high side of this orange down channel. Enough room to the low. First entry short pullback, second entry short, lower high confirming, fully engulfing these two previous bars, push up, engulfs this guy. And as you saw a previous price action, when the final candle before the big move happens and engulfs, it kind of tends to go in that direction. It doesn't reverse. So I was thinking, well, clearly it's going to move down just like this guy here. Just like I think earlier I had another engulfing candle. I think it was something like over here. I don't quite remember now. But I thought, okay, clearly there's a big move coming. So I entered on the engulfing because it looked like I was pushing down. It picks me up, pushes down, recovers, and I thought, cool, I'm just gonna go for a quick 6 tick scalp, 1.5 points. Reverses, stops me out right here. So that was kind of a bummer. So I do look at it in hindsight, and I thought, should I have taken this trade? And I'm not really sure. I think it was definitely more aggressive, but everything was telling me the way I had it drawn that this move slightly. This orange down channel was valid. It's a small breakout here. It's coming back down. It wants to test the low because it failed here. It looks like it's making a second attempt. I had no idea that it would reverse like this so strongly. And if I kept it even one tick above here, this candle would have stopped me out. So if I kept it at a swing high, I would have just lost even more points. But I kept it above this guy because I thought this is pretty firm resistance, but I was clearly wrong. Then prices continue moving up, start chopping. Looks like it's pushing down this orange down channel. I do have this yellow channel drawn pretty early because I had 1 touch, 2 touch, 3 touch, but the high side looks like it fit pretty well. It is a first entry long pullback. You have a second entry long triple test. Now, this is the second trade that I took. It's not that close to this one, but it did definitely affect me that I lost on this one. So I will admit that this one is a slightly more aggressive trade because if you look at it, a measured move has been made here. Now it's looking like it's going to come back up. My assumption was the strength of the bounce off of this yellow up channel plus the bounce off of this potential low of the trading range and the break of this red has already tested low. All three is stronger than the fact that it has made a measured move. This orange down channel, again, I wasn't sure if it was here or here or here. Ultimately, I put it here by the end of the day. But in this case, it kind of already played out the low side. Plus, the recovery has moved more than 50% of this sell-off. So I'm thinking there's probably not as much pressure selling off. So I decided to take this trade. I entered 1 tick above, and actually for this one, I was thinking I want to get some of this losses back. So I went for full 2 points. Very aggressive, more aggressive than I usually do. Full 2 points. Stop loss is below this double bottom, and I got it. Then prices moved up. I wasn't going to try to go for a runner because I was concerned about this potentially being some kind of resistance point. So there's no point trying to go for a runner, just take the entire position off. If I did go for a runner, this candle would have stopped me out anyways. So it moves up. I'm confirming, prices are confirming this yellow up channel support. So I'm trusting this yellow up channel more and more. Breaks, this range doesn't look like it's in play anymore. Pushes to the high side, gets kind of congested. You have a first entry long pullback. Technically, you have a second entry long here. Now, this definitely was a little bit emotional. It was getting choppy. I was thinking this yellow up channel wants to test the high. I decided there was a good enough trade here, seeing the finish on this because it didn't break below the EMA. This is the first breakout of this yellow up, and I'm expecting to test the high. I did have this drawn, ironically, this orange down channel drawn, so I should have kept that in mind that I could be buying right into this resistance, but I took the trade anyways. So as you can see, I entered, immediately goes against me, and my stop is below here. I'm expecting to take a loss now. It double bottoms, pretty much triple test. It doesn't hit my stop, which is finally it gives me 6 ticks. Now this honestly shouldn't have been taken at all because this is a poor setup. This is a bad trade. It is technically a second entry long, but that isn't good enough. I should have waited for a higher low. On top of that, this is definitely affected by the loss here because I took a loss. This one didn't cover up the loss here because my if I was going for 1 point and I take a 3 point loss, then I'm already 3 points down, and I only recovered 1 point. But I did try to go for a little bit more here, so I was thinking maybe I could get this one trade get me closer to break even. So I went for 6 ticks when in actuality this trade shouldn't have happened. And if it did, I should have considered just bailing on it earlier or just taking a break even. Or even if I was more optimistic, just 1 point, not six. So as you can see, it gives me my 6 ticks, and then this candle would have stopped me out. So I was very fortunate on this trade. As you can see, it barely dwelled any time at this price point. So I could have easily been sitting here, never get filled, and then gotten taken out here waiting for 6 ticks. So clearly this is a foolish, not the best trade to have taken, essentially, as it just comes down to it. Then prices break down to the low side, starts moving down the secondary green down channel. It's also getting into the late, pretty much the end, last 30 minutes of the day. Kind of fast forward, pushes up, and then moves into the last 10 minutes where you can't really reliably trade this because it just gets really whipsaw. So really a day that could have been just skipped altogether, but I forced things, ended up in the red. The last two trades were definitely a little riskier. Should have just stopped after the first trade and left it alone. But I was lucky, especially on this third trade, that it worked in my favor. Definitely have to jot down and keep track of my mental state because it's Monday. Usually on Mondays, I find that I tend to make some more mistakes because you had a weekend and you're kind of eager, or in my case, eager to start trading, try to try to get some positive trades that I, or more or less, invent setups that aren't there. So hopefully that was helpful.